Hi, I'm Pamela Peterson. I'm an enrolled agent licensed by the Department of Treasury and principal member of Accounting Freedom, where we help you and your small business with your tax and accounting needs. I'm joined today by Mike Sullivan, former IRS agent and IRS teaching instructor, who has worked over 10,000 cases resolving tax debt issues with people just like yourself who have, for better or for worse, found themselves in sticky situations with the IRS. We are here to help you find tax relief and some uncommon answers to IRS questions. So welcome, Mike.
Hey, it's great to see you again. And like you said, we're here to tell people the truth. There's a lot of thing that floats on the internet. Everyone's trying to sell you things, and in reality, a lot of that stuff is not true. People see an ad, they think it can be done, and boy, a lot of people in this industry, in this vertical, they get ripped off because really they don't know who to trust. And as you know, you and I get a lot of calls, and at the end of the day, we find out people have been ripped off from anyone and everyone, because everyone is hoping, right, they can settle their tax debt.
Yeah. Well, Mike, what does the IRS look at when they consider settling tax debt for someone or someone's business?
Well, before we start, let me at least tell you this. The program is called the Offer and Compromise Program, and I work that program. I used to accept offers and deny offers, and then I was a teaching instructor. So when you made a certain grade as a revenue officer and you became more advanced, you were allowed to work offers because it is a legal settlement with IRS. So they take this a lot more serious. A matter of fact, some of them have to be signed off by district council. But IRS is looking at two things. There's a lot of little small factors that come into this, but the two main things, and we were just talking about this before what we were doing, IRS wants to know what is the value of your assets. Your residence is discounted 20%. They're not going to settle for any less. They just don't. So if you got $100,000 worth of equity, IRS isn't going to settle. As you know, we were just discussing. You just had a call the other day. We had to tell them no, we couldn't take the case because we're honest. And the other thing they look at is income and necessary living expenses. Now, this is very critical, Pam, as you know, because IRS only allows you certain expenses. You can't just, if, in other words, if someone has $2,000 rent and someone has $10,000 rent, what is IRS going to do? Are they going to just give you rent? So what happens, so everyone knows, and the Department of Labor has statistics all across the United States of what IRS is going to allow for expenses. And what IRS does is they kick your expenses out and they slip the Department of Labor statistics in. And so offers and compromise require a lot of planning. They require a lot of qualifications, and you just want to make sure a person is getting the truth when they call us.
Yeah, and so basically that means offer and compromise. If you can get that, it might mean that you will owe less than what the IRS has said. So if you've got a really scary bill and you qualify for everything, it might mean that we can get that reduced.
Yeah, and it really just takes us, believe it or not, it just doesn't take Pam and myself very long. If we get your IRS financial statement, we can tell you in less than a minute if you're qualified for an offer in Canada. Just so you know, there's three ways IRS closes cases. I think we said this in our last show, but I think it warrants saying again. When IRS looks at a case, they either close it because you can't pay. That's called currently non-collectible. That means at that moment, it's currently non-collectible, or a payment agreement because your financial statement warrants it, or your financial warrants a settlement. Those are the only three ways IRS is going to close a case that the statute's still open on. That's it, nothing else. So what we do, we look at your financial statement and we tell you upfront what we can do for you.
And then there's one other point too to consider as when we were talking about, when people get scary letters, that amount is actually always increasing day by day. So don't delay. Like if you have a letter and they're saying you owe, this really scary amount, it's important to act right away. as soon as possible. Even if you've already put some off, you've received more letters, the sooner the better, because those amounts continue to grow.
And just so you all know, when you get a CP 504 and it comes out certified and they say that they're going to levy and season lien, they're going to do that. There's no person overlooking your case. Your case is in the IRS K-2 computer system, CADE, and it just keeps rolling. You have to have someone at IRS turn off the switch, or IRS is just going to wipe your bank account out, your wages, and file a federal tax lien if you owe enough money. So,
and we know how to call and make them turn off that switch. So
okay,
Mike,
we have
thank
the
you.
key. Oh, yeah, you have the Matt. Show him the key. Isn't it in your desk right there, Pam? Yeah, you showed me the key the other day.
All right. Well, Mike, thank you so much for being here with us today. And thank you for watching. If you are facing pressure from the IRS and are seeking tax relief, please contact us today at backtaxes911.com. We can help you unburden yourself from the tax debt and get you or your business back in IRS compliance. And if you happen to have a question about a personal situation or want to know about a topic more, please leave us a comment and we may even address it in a video. Thanks so much for watching.